let's start. 1 minute. So welcome everybody. We will do the presentation in a traditional mode. You know the setup. In the beginning, a short summary of what happened, major milestones, then financial numbers and outlook for 24. So when we would like to summarize 23, we had a very, very strong banking segment. This was a result of a couple of projects that we were completing in Bosnia, but also in Serbia especially. Many of them finalized, which boosted 23, but also we see a slowdown in banking in 24 because we don't have as many open projects as in 23. And this is visible in the backlog, which is mostly banking affected for this smaller peak. Excellent patent and payment segment, very good fourth quarter. You can see the growth in EBIT in most of the segments, but the most promising and the ones we were betting on is e-commerce, processing of physical cards, independent POS, POSs, and electronic cash registers, fiscal registers. These all segments grew very much in the whole year and in the fourth quarter. So we are very, very happy with this. Yes. Third-party deliveries dropped a bit, which is, in our opinion, not a bad news. We think they will not drop long term, but POS, traditional and ATM deliveries were not so big as usual. But as mentioned, they were compensated by the lines just mentioned beforehand. You can see on transactionality, we are starting to show transactions we are generating, and in e-commerce, we are slowly approaching 2 billion of transactions that we process, 14% growth. In independent POS, it's much smaller, but the dynamics is huge. It's 180 almost million transactions, and we expect big growth in 2024, thanks to all the markets where we are present, but especially Romania, where we are now expanding the quickest. And in traditional processing of physical cards, 23% growth. This is mostly Serbia, but also some of the neighboring markets, and above 400 million transactions processed. So good result. For dedicated solutions, it's more complicated because actually this segment grew both in revenues and profits if you exclude one-offs. We had two major write-offs on two contracts we decided to make. One was a continuous loss contract in Serbia for public administration. We decided to finish all our contracts as sort of our PR reputation type of things, that we never drop like some other companies, including international ones, contracts or renegotiate them. Here we said we will finish it. So we see the end of this contract end of June, and it looks very good with relationship to the customer, but unfortunately it costs. Yes, so we were making above 500,000 additional write-off on this contract. Michał, we can mention details. And a big on one company before acquisition in Bosnia, they signed a contract with Oracle. Oracle positions itself in a pretty brutal way with partners, subcontractors, giving a big commitment on emails and in conversations and presentations, but in contract, we would have stopped it if it would be our company, but they took zero commitment except for license. They cannot deliver the services they promised, and there is a risk the contract can be dropped. So we've done a significant write-off just in case on this contract, which is almost approaching 1.8 million euros. So these are big one-offs that affected the profits. Without them, this segment looks pretty good. Yes, in Turkey, quite a good year, but challenging all the time. Inflation versus currency depreciation, they are not aligned together. We have new elections in Turkey, local elections, and our local managers say that this is usually an element which creates some disruption in economy and not always market-driven moves by the government. But after the election, late March or beginning of April, they expect normalization. Yes, we will see effect of our price indexation new policies after first quarter. We are quite positive we'll manage to do it in the right direction, but there's huge still salary pressure in Turkey because of this inflation, above inflation, and we are trying to cope with it. But we are addressing this in line with the market trends. For the biggest contracts, look, this is not so, these are usually repetitive. You should not look at the contracts themselves in our business, but more the trends, what type of things we are signing. You can see many adaptive elements or digital edge contracts here, which are mobile banking, internet banking related solutions, which we see nicely developing and improving. There is security solutions like App Protected. It's a new product for protection of applications on the security side, and we see growing sales of this element. And open banking. In open banking, this is PSD2 driven, more for less developed markets like Macedonia or Montenegro, but we do see hope for this product on other markets. If we move to dedicated solutions, the kind of spectacular deal is the smart city deal, a big smart city project signed by BSTS in Sarajevo, so the capital city of Bosnia and Herzegovina. The whole canton actually of this in this place, and it's a great reference, and we are implementing it now. Then some document and workflow management solutions in Serbia for the public, and in Romania also very nicely developing. And Dynatrace, the only third-party solution, but this is the only third-party solution we are having that very much contributes to our SaaS revenues, repetitive revenues in dedicated solutions. For Payton, I would say pretty typical business in e-commerce, a lot of payment gateway deals for Turkish markets sold directly for merchants. And one interesting deal in Iraq, because we entered Iraq, we sold a payment gateway in a SaaS mode to Iraq. It's not that big, couple of 100,000 upfront, but as the Iraqi market will develop in e-commerce, which we do believe it will, we should have much better results from that deals in the future. Also some processing extension for one of the major banks in Serbia, but that's business as usual. For POS and ATM, as mentioned, some deliveries, some deals, some bigger independent POS deals here as well in Croatia, but I would say this is more business as usual, which is quite satisfactory, but a bit lower than in POS and ATM than in 22. And now the numbers, Michał, please.
Now the numbers. So let us start with Q4. So the shape of slide, you probably know it, but only to recall, first two columns are total figures directly from our estimates, which we publish, and third and fourth column is section where we exclude from result effects of IAS 29 reporting, so hyperinflation. And all figures we will be showing on following slides for segments or countries will be always on figures excluding effect of hyperinflation. As you see on top line, we have 8% growth in euro. Most of this, 80%, is thanks to own activities, so on services, on maintenance and other recurring revenues. What is very satisfactory for us. On operating profit level, 10% growth when we look at euro numbers, and only 3% in Polish zloty. This is related with appreciation of zloty versus euro, which took place in H2 of 23. And this is why this dynamics is lower. On EBITDA, very similar. When we look at on absolute numbers, it's slightly lower growth than EBIT, and this is related with depreciation, which is lower in 23 versus 22, mostly in payment on POS-related services and in IPD net. What below EBIT? So here we have increase of finance activity and increase of result by 1.8 million euro. This is mainly thanks to effect of revaluation of put options and contingent considerations on entities which were acquired in previous years. And additionally, around 400K is thanks to lower dividends paid to non-controlling interests. Some of entities we consolidate using present ownership method, and in this method, cost of amount of dividends paid to minorities, non-controlling interest, lands in P&L of group in financial activity. And this was lower by 400K than in previous year. As for taxes, here we have a drop of effective tax rate in Q4, quite significant, but I wouldn't comment and focus on quarter only. I will tell more on annual numbers. Looking at segments, let me start from banking. Here we have revenues pretty flat with slightly increased operating profit. This, of course, gives increase of profitability, and mostly this increase of result was in current security solutions. As for dedicated, here, quite a big growth in revenues, more than 6 million euro year over year. This is thanks to third-party solutions and mostly licenses deliveries in Romania and Bosnia. And as Piotr mentioned, excluding effect of one-offs, which were those provisions we accounted on those two projects, EBIT is growing, yes. So if we reverse effect of those provisions, profitability, which was in last year 9%, this year will be even slightly higher. And last segment, payment. Here on top line, we have growth almost 2 million euro with even higher 2.4 million euro growth of operating profit. Of course, profitability increased, and this is thanks to change in structure of business, of revenues and results. So as we promised on previous meetings, previous conferences, we changed a bit this slide and what we are presenting. So now in table we have four business lines or aggregation of business lines. First one, ECR plus IPD. This is this merchant-related business in which we offer electronic cash registers or POS network directly to merchants. Then we have e-commerce and processing. So this is payment gateway offered to enterprises as technology or service, but also directly to merchants, as well as processing of transactions on POS and ATM. And then those two more traditional lines, ATM and POS. ATM, we have also included independent ATM network under MoneyGet brand, which operates in Croatia, Albania, Serbia, and Montenegro. And about figures, so the biggest growth, 3.3 million euro, we have in e-commerce plus processing, and here the growth is in Western Europe, Turkey, and in smaller values in Serbia and Croatia. For merchant lines, so ECRs and IPD, growth mostly in Croatia, but it starts to be visible also in Romania. So those numbers from Romania start to contribute and are visible in this growth. In those two more traditional lines, we have a drop of revenues. In ATMs, this is related mostly with lower deliveries of new ATMs in Macedonia and Romania, what was partially compensated by growth in Bulgaria, Croatia, and Serbia. And in POS, as we mentioned on previous conference, the drop is mostly in Western Europe after 2 years of significant deliveries of Android POSes on this market. But it was partially compensated by increase in deliveries in LATAM, Central Europe, so Czechia, Slovakia, and Romania. What is new on this slide is only also this pie chart in which we present a structure of EBIT, so the contribution of business lines to EBIT of Payten. And as you see, for ECRs and e-commerce, ECRs and IPD plus e-commerce and processing, in total it's for 44%. In total payment operating profit. Of course, from quarter to quarter, it can change, especially due to POS and APMs, where we can have those more one-off nature deliveries. And let's move to result by countries. So what's visible here? We have few markets with nice growth. The biggest is in Turkey, where growth is in dedicated solutions and in payment, more or less half. Then also Romania, very nice result, huge growth year over year, and not only in Q4, as you will see, also on full year numbers. And this growth in Romania is banking and payment. These are the lines which contribute. Croatia, again, nice growth here in dedicated solutions in BPM and contact center live solution, and in payment, mostly in e-commerce and this business directly to merchants, so ECR and IPD. Two countries with drops, Bosnia and Serbia, and in both countries those drops are in dedicated solutions, and this is related with projects and provisions we already mentioned before. So Telco Oracle project in Bosnia and this public deal in Serbia. So let's move to results for full year. Slide is the same, like structure of slide is exactly the same, and those figures in terms of dynamics are also pretty similar. In revenues, 9%, so slightly higher growth of revenues than on in Q4. But what is worth of mentioning here, this growth is fully on own activities, on services, which grew even more and compensated the decline on third party. On EBIT level, 11% growth year over year. In zloty, again, smaller, but not the gap is not that big. It's only 4 points here between currencies. What below EBIT, here we have increase in finance activity, 1.5 million euros, so very similar as in Q4. Of course, revaluation of put options and contingent considerations, mostly from Q4, it contributed around 2 million euro. And then we have also positive effect or year-over-year effect of in amount of 800K, which is related with loss on capital transactions related in 22, recognized in 22, which we don't have this year. And also this topic of dividends to non-controlling interest on annual level, they were also lower by half million euro than in 2022. On the other hand, it was compensated, and those positive effects, they were compensated by smaller positive FX gains by 1.6 million euro. Still, we have positive FX gains, but they are not that big as in 22. And taxes. So when we look at taxes, at those hyperinflation adjusted numbers, here we have slight increase of effective tax rate from 19.7 to 20%, so 0.3, nothing big. But we should remember that in 23 we had this one of extra earthquake-related tax in Turkey. It was around €500,000. So if we exclude this one-off tax, and then operations related effective tax rate, it's slightly decline year over year. So let's move to segments. Here again, starting from banking, nice growth of revenues, almost €8 million, and followed by increased of operating profit by 2.4, with slightly increased profitability. So very good year, very good results for banking. In dedicated solution, big increase of revenues. Here we have this third-party component and around mostly in Romania, Serbia, on third-party deliveries of equipment and licenses. On operating profit level, we have declined €0.8 million, but of course those provisions, yes, excluding them, profitability should be even slightly higher than in previous year. So this is about dedicated and payment. Very good results. Biggest contribution to this overall growth of operating profit, €3.5 million higher EBIT. And if we look at the details by business lines, biggest growth is in e-commerce and processing. Here, biggest contributor Turkey, followed by Serbia and Western Europe, with smaller growths in Bosnia and Croatia. So as you see, not one market, but a few markets contributing to this growth. In ECR IPD, it's more concentrated, big growth in Croatia, but also visible in Romania, as similar as in Q4. And ATMs and POSs. POSs pretty stable, slightly lower, but with change in geographies, structured by countries, drop in Western Europe due to lower deliveries, but compensated by better LATAM, Central Europe, and Romania. And also the drop in Serbia is related to Q2, when we have in Q2 22 big delivery of POS. And ATMs, here is biggest drop of revenues, €6 million, over €6 million, and it's mostly related with huge deliveries in Serbia. Like 2/3 of this total amount, and smaller in Macedonia and Croatia. When looking at contribution of EBIT by business unit, as you see, around 40% on ECRs plus IPD and e-commerce plus processing. So, and this is growing. If we look at now such data a few years ago, this contribution of e-commerce and ECRs was by far smaller than.
Yeah, and I would add here, we expect this to approach 50%, and it's a huge change over last 5 years or 6 years. Yes, so you can see continuous diversification of the payment business into much more recurring type of merchant or e-com driven business. And we plan to continue that. Yes, so you'll see this change will be continuously showing. This is a new chart of the EBIT split. We were showing the revenue split. Now we move to EBIT, and we hope that these proportions will move in the direction described. We hope. Please continue.
And countries, geographies. Three countries with biggest contribution to the growth is Serbia, banking plus payment. These are the lines where we have growth. Then Croatia, 2 million euro, and here we have banking and dedicated solutions as biggest contributors. And Romania, as I mentioned when commenting Q4, that a very good year for Romania, a nice growth, almost over 90% increase, and this is mostly thanks to banking and payment business line. The only significant drop is Bosnia, but we already know the reasons. So provision on and reversal of revenues on this one contract. Other countries, mostly small increases. Maybe I will also comment this other. The growth is mostly in Albania, where we have a good year in banking and independent ATM network within pay. So this is about results, and let's look shortly at balance sheet and cash position. Cash is higher by more than 8 million euro year over year. Some small changes on liabilities and loans, lease liabilities and loans, nothing spectacular. As for deferred payment and contingent considerations, here total amount is of short-term liabilities is almost the same, but the structure inside is significantly changed. Yes, so on one hand we settled some liabilities. From those important is Necom Plus, where end of December we executed partially put option or minorities executed. And also we somehow would change contract, and part of liabilities was moved to long-term part. Plus we have recognized liabilities, contingent liabilities related to acquisitions closed by Bosnian entity and in Portugal during Q4. So overall net cash 7 million euro higher than end of last year. On receivables and liabilities, we have quite a big change year over year. They increased. Partially this is related with acquisition closed. So receivables growth due to acquisition is around 13 million. Liabilities slightly higher. On top of this, we have quite many projects which were closed, delivered in Q4, so they are on balance sheet. But in terms of receivables, we have two big projects where client paid us, but we have not yet paid to our vendors, or the payment was in form of prepayment, so we deferred revenues on deferred income. Additionally, part of liabilities is related with increased inventory, which are higher by 10 million euro, and some of we haven't paid to vendors yet for those deliveries. As you probably remember, for Q2, inventory on that time was pretty similar as currently, but it doesn't mean nothing is happening. We have quite a change in structure as commented after Q3, inventory in Western Europe decreased comparing to Q3, but increased on other markets where we bought equipment for future projects. And looking at cash flow, it is very good, very strong for 23. Operating cash flow over 17 million euro. Below for investments outflows, this what should be mentioned. I think here is M&As. Here we have quite big increase, and this is payment for those three companies which were acquired during Q4 plus this minority stake purchase in Necom Plus shares. Free cash flow, almost 37 million euros, so higher than last year. Very nice conversion of operating cash flow to EBITDA, over 100%. Of course, not possible to continue in long run, but as we said after Q2, Q3, when cash flow was a bit lower, and according to expectation, Q4 was very good. Of course, in the coming quarters, we expect it to be slightly lower, not over 100%. So this is about cash flow, and let's move to outlook.
So traditionally, we are showing the backlog coverage. Here we see a big difference between the banking and dedicated solutions backlog coverage and Payton. Yes, so banking and dedicated is even dropping slightly, mostly due to banking, as mentioned. And for Payton, it's really strong and good. Yes, the backlog coverage. What can we comment on this? First, in banking, we do expect a drop compared to 23. That's out of the question. And also, we have some major investments in the product renewal. We are expensing all our R&D, so this hits the P&L. So the profitability will be lower in banking because of this also. For dedicated solutions, we have a couple of projects which we didn't budget. If they happen, they will be positive surprise. So here, let's see, but we prefer to be on the conservative side. For Payton, as I said, we plan to grow on all the levels, all the business lines, POS, ATM as well this time. But overall, we are quite positive. The market consensus, as we read, expects that our whole group, ASEE group, with Payton, will do around 55 million euros on operating profit. We don't see major reasons to say this is too optimistic or too pessimistic. So we think this consensus is pretty reasonable. And of course, we promise to comment on it as we go and give to the market all the updates if anything positive or negative happens compared to this. Of course, we focus very much mostly on building this part of revenues which are recurring, so SaaS-driven revenues, subscription, outsourcing type of revenues. This is our major focus. As for acquisitions, we often get questions. We do have a pipeline like in the past. You see they are happening. Some we drop as we go. For the small ones, we drop them mostly unless we have a very strong buy-in by local managers who say they will. It's very complementary and they are comfortable with people and owners. And we do expect to expand our also geographic coverage, not only organically, but also thanks to acquisitions. You see, we have more and more revenues out of the Balkan region, pretty strong on Iberian Peninsula, Spain and Portugal, slowly growing Latin America, and we hope other markets. Italy is slowly growing as well, and other markets to develop as well. Yes, to have even bigger diversification than we have today. And we are open to your questions. If you have any questions, feel free. You can ask on chat. I think you can also use the raise hand, and we will allow you to do it through voice, whatever. They can be difficult ones as well. Please. Any questions? Any additional or comments or requests? Something we should clarify. You can also write on chat if you wish. For negative projects, we don't see any major outcome or any major additional negative projects. The one in Serbia is being finalized. The one with Oracle, we have covered over 50% of the whole contract value. So if things go really sour, then it might be still another about 1 million write-off. If they are positive, we are talking about reversal, yes. But we think we've taken a pretty conservative stance now as usually we do for 2023. listen, if you don't have any questions, we invite you very much for direct contacts. We are more than happy to have a conference with you, chat, whatever, and to answer all open issues. And we will be continuing diversifying the business, and in M&A we will be focusing on bigger targets for sure. You will see this in the near future. Thank you very, very much, and all the best. Take care. Thank you.
Thank you. Bye.